Hello and welcome to this edition of China-U.S. Econ Talk. I'm Guanxing in Beijing. The year of 2022 is now upon us. It's time to reflect on economic policies last year and see where the China-U.S. relationship is heading in the new year amid post-recovery of the world economy, in particular how to manage rising tensions in tech competition between the two sides and how to enhance understanding of China's recent tech lash. To delve into these issues, it's our honor and pleasure to be joined by two world-renowned economists from the two countries, Professor Lawrence Summers, former Treasury Secretary of the United States and President Emeritus of Howard University. Welcome. And Fred Hu, founder, chairman, and CEO of Primavera Capital and the former chair of Greater China and Goldman Sachs. Welcome to the show, and thank you both for your time today, gentlemen. So before we get down to China-U.S. relations, I have to ask about inflation because we're now at a tipping point that the U.S. is pivoting its policies, which could send ripples across the world economy. So Professor Summers, you correctly warned of U.S. macroeconomic policies leading to the inflation very early. Now, what is your assessment of the situation?
I think we've got real inflation risks in the United States. We have a very strong economy. We have a record level of job vacancies. Workers are leaving firms at very rapid rates to seek opportunities elsewhere. Labor shortages seem pervasive. And at the same time, we've got a relatively rapid underlying rate of inflation, with the CPI up 6.8% over the last year. At the same time, we have extraordinarily easy monetary policy with real interest rates looking extremely low over almost every horizon. So I think barring some policy adjustment, we're in real danger of having accelerating inflation. The challenge for policy will be to moderate inflation without doing damage to the rate of economic growth, without inducing a recession. And that's going to be a very difficult and delicate balancing act, especially in light of the fact that asset prices are at very, very high levels at this point. This is a consequence of the tremendous level of stimulus that we infused into the economy last year, even as the process of recovery was beginning.
What's the chance do you see for a recession?
I think the chances are that we'll avoid recession this year, but I think that's a very, very strong chance. But I think the chance is perhaps 40% of a recession beginning sometime over the next 2 years.
Well, Dr. Hu, the U.S. dollar is a major international currency. How will high U.S. inflation and a possible recession affect global economy, capital flow, and your investment decisions?
Well, rising U.S. inflation clearly has major implications for the global economy and the financial markets. It would likely reduce demand for fixed income securities, such as unindexed government bonds and investment-grade corporate bonds, although it would likely increase demand for riskier, high-yield bonds. Stocks generally offer some hedging against the inflation, but it is a question mark how well U.S. equities would perform in an inflationary environment where the Fed is poised to hike rates, and the U.S. equities are already at elevated levels of valuation by historic standards, just as pointed out by Larry. In general, real assets such as commodities and real estate might potentially outperform. As for Primavera, we mostly operate in the private markets, taking equity stakes in faster growing companies in sectors where we expect high productivity growth, mostly driven by technological innovation, or in some cases, by business model innovation. Furthermore, we take a relatively long investment horizon, say, over a period of 5 to 10 years. Hence, private equity strategy works quite well in an inflationary environment.
And that is some sort of, we're really seeing some new reality for global investment. And now let's turn to the relationship between the world's two largest economies. Despite rising tensions on political front, I think it's safe to say there remains a deep interdependence between Chinese and American economies. So, Professor Summers, what is your observation of the changing China-U.S. relations and the future of economic ties between the two sides?
I'm concerned that for domestic political reasons, the tensions between our two countries are being talked up by many political figures in both countries. I think the reality is that the United States and China do have very different economic systems.
Right.
That those very different systems are not likely to converge in the foreseeable future. But I also think that they share a common world. They share a common planet in terms of the issue of climate change. They share a common biosphere in terms of the issue of pandemic. They share a common heritage of natural resources and commodities and scarce commodities that have to be used prudently. They share a common interest in a world that is stable and in a world that is generally prospering and in which all are able to trade. And my hope would be that those mutual interests would be seen as more important than issues of local prerogative or issues of specific competition. It seems to me that the challenge is not to find our way to affection or to emulation, but is to find our way to mutual respect and mutual efforts to solve and address global challenges that ultimately affect the lives of children born in both the United States and in China. And I think if that kind of focus on where the deepest long-run interests lie, rather than on trying to convert each other or trying to score points off each other, can be the focus of the relationship, I think very substantial progress can be made.
Right. Well, China and the U.S. really need to find a way forward for more cooperation on common challenges. And Professor Summers, President Biden said at a virtual meeting with President Xi last November that their responsibilities was to ensure that competition does not veer into conflict. Is there a viable relationship to manage strategic competition?
I would hope that there would be. I think it will require a willingness to sit and discuss separate issues separately. I think we have common interests, for example, with respect to pandemics. And I'm very disturbed that by many accounts, the level of cooperation between our two countries with respect to potential virus threats has actually declined over the last 2 or 3 years. I think we have common interests with respect to climate change. I think we have common interests with respect to open seas in which goods can be transported freely. And I think those need to be the focus of our concerns. I don't think it is or should be the legitimate aspiration of the United States to prevent China from emerging as a global power, given its tremendous economic achievements and given its great economic strength. At the same time, I don't think that it is a reasonable expectation for China to seek to displace the United States from a place of global influence. I think it is appropriate that China respect existing international understandings in particular spheres, and that we find a way to negotiate to compromises that satisfy neither of us. I recognize that as Chinese leader Xi Jinping said some years ago, that there's a need for a different kind of great power relationship. I certainly don't think the Cold War is an attractive model for the relationship between our two countries. But I do think that there needs to be a recognition of values that are important on both sides of the Pacific.
And that mutual respect is the foundation for a healthy relationship. We really need to increase mutual understanding. You know, that tech competition is heating up, and many tech companies are caught in the middle of China-U.S. tensions. The U.S. put more Chinese companies on the investment ban in December, citing various reasons from military background to human rights abuses that these companies strongly reject. Meanwhile, China accuses the U.S. for politically suppressing these companies and violating free market rules. So, Dr. Hu, what's behind such mistrust? What do you think about the possibility of decoupling, particularly in the tech sector?
Well, I do worry about the rising risk of decoupling, largely driven by politics. Forcing Chinese tech companies to delist from the U.S. stock exchange would not serve U.S. interests. Yes, the Chinese tech companies would be hurt, but many U.S. investors would be also hurt in the process, because investing in those shares have been a viable way for U.S. investors to access to and benefit from China's growth opportunities all these years. And I think for Chinese companies to list also, not really, U.S. envied position as was, the leading financial center might also suffer if China is cut off. Chinese companies, of course, are not without the options. They could return home markets like here in Hong Kong or Shanghai. But I would hope both sides would let the cooler heads prevail, just sit down and talk. And I see a big room to work out a practical agreement to address legitimate U.S. concerns while averting a lose-lose outcome for both sides. The question of delisting aside, both Chinese tech firms and the U.S. ones are being caught in the crosshair with deteriorating bilateral relationship. People fail to recognize there's very high dependency on each other, between the world's two largest tech ecosystems. Just for example, US controls 70% semiconductors and 90% of software Chinese companies use, while China is responsible for more than 50% of global IT gadgets and IT supply chains, 70% of the EV batteries in the world. So both countries would be better off if they trade with each other and freely access the tech products and services provided by each other. Of course, long term, as this increasing tendency by Washington to impose various forms of sanctions, whether it's anti-list, outright bans, sanctions, not just against Huawei, but increasingly against virtually every successful Chinese tech company. That would tell the Chinese tech leaders, US is a completely unreliable trade and technology partner. So what will happen? You might call it China's Sputnik moment. So over the medium long term, China would innovate, not just because China wants to go alone, but is left with no choice. China would have to redouble its own R&D and develop indigenous technologies to substitute, at the minimum, for US ones in the domestic market, and if successful, eventually displace US in the global markets. So that's not not necessarily favorable for both countries.
And Professor Summers, do you also see more risks of decoupling between the two sides?
I think there are real risks. I share Fred's concerns that sometimes stopping Chinese companies from listing on US exchanges can be a lose-lose proposition. On the other hand, US exchanges have certain standards with respect to financial reporting, and when those standards are not met, I think those standards should be applied in the same way to companies from every country. I think it's important to recognize that in terms of financial decoupling, not all of it is induced by the United States. I think, for example, of the pressures that were brought to bear on Didi by the Chinese government. I think it's also important to recognize that there do need to be some rules of the road with respect to civilian activities versus military and intelligence activities. And it has been the view of the United States, and I'm not in government, so I'm not in a position to provide a direct assessment at this point. But I think that many very thoughtful Americans with very substantial access to information have been concerned about the business practices of many Chinese technology companies. And it's necessary and appropriate that in formulating policy, the United States take that into account. So I think we need to find a balance in these things, and I think it would be a mistake to see American actions as purely protectionist, or to see American actions as unprovoked, or to fail to recognize that in some cases there have been rather problematic practices of Chinese companies and Chinese who are engaged in these processes of international integration. I think it's a wonderful thing that my good friend Fred was able to study at Harvard, and I'm enormously proud to, in that period, have had Fred as one of my finest students. And I think the kind of friendship that we were able to form is a kind of friendship that repeated thousands of times over because of thousands of experiences is a very, very favorable one for the US-China relationship. But if students and scholars on either side are seeking to subvert the other country, then it becomes much more difficult to maintain that kind of integration. And so we have to figure out ways of having engagement with reassurance that these kinds of developments are not taking place. 20 years ago, it was reasonable for China to think of itself as a poor country that sought to import the world's knowledge and lever the world's knowledge to catch up. At a time when China has the kind of enormously successful technology companies that the Alibabas and that the Tencents represent, I think the understandings have to be somewhat different in terms of fair play, in terms of reciprocity, in terms of the rules governing technological interaction.
And there are concerns on both sides in the time of changing world order. And now let's talk a bit more about China's policy outlook. Dr. Hu, many China observers have noticed the big implications of Common Prosperity Plan. I'm sure you're also looking closely at how China is calibrating its policies guided by this concept. So from your observation, is it more like a correction of its policy path or a change of direction?
To me, common prosperity means inclusive growth and building a very large middle class. Hence, a quite attractive policy vision for China going forward, now that our country has succeeded in eliminating poverty. Despite the criticism, I find nothing sinister about the common prosperity. China is not going back to the old extreme egalitarian model once practiced before 1978, period. So I take great comfort with the assurance that there's no intention to rob the rich, to help the poor. China is not relying on purely redistributive policies, Rather, the emphasis is on creating equal opportunities for the broadest segment of population possible, with equal access to education, healthcare, social safety net. That way, Chinese people continue to be incentivized to embrace entrepreneurship and innovation, while the fruits of economic growth, the prosperity, can be more widely and equally shared, hence more socially sustainable.
And Professor Summers, what is your take on the issue? You flagged the risk for foreign investors as the Chinese government intensify its regulation on the tech sector, but how is that different compared to practices of Western countries such as anti-monopolistic efforts by the US and European governments?
I think that there is a perception that is spurred by many things that happened in the last year and a half. What happened with Alibaba, what happened with the ed tech sector, to take just two examples, that there is more capacity for arbitrary change based on bureaucratic decision in China, less predictable on the basis of the rule of law than is the case in Europe or in the United States. And I think that perception undercuts confidence, which is important for investment. And I think that is a significant issue for people from the West contemplating investment in China.
So analysts say the tech clash in China and the U.S. will set the stage for next phase of competition. Professor Summers, I know you are a pro of deregulation. Do you agree with China's economic model to have more government intervention to prevent market failure?
I think there's going to need to be substantial new regulation to deal with the new issues that tech poses, whether it's the addictive character that some technologies can have, whether it's the impact on young people, whether it's the questions of the propagation of false statements, whether it's the capacity of foreign governments to subvert national objectives. I feel very strongly that in the United States, we're going to need new and enhanced regulatory frameworks for our major technology companies. And I know there are similar feelings in China, and I agree with that. I think that the questions that where there's likely to be differences of perspective are likely to involve how much one wants to encourage open expression, where values of community versus values of individuality perhaps are given different priority, often in the United States and China. But I certainly think that the idea that major tech companies will need enhanced regulation is a point on which I think few will disagree, even if they do disagree on what the precise content of that regulation should be.
And President Biden expressed views that China is challenging the U.S. with this model, and he suggests a task for his government to prove that the American model of capitalism works better. What is your view on that?
I think we all want to see as much prosperity for our people as we can. I would rather see the greatest power of America come from its example. And I think we need to strengthen that example. We need to strengthen that example by showing that more effectively than has often been the case in recent years, government by the people can be effective government for the people. And that's why I think issues ranging from the universalization of healthcare to the protection of privacy, from assuring economic security to developing cutting-edge vaccines. I think all of these are crucial issues. I think ultimately the greatest power that the United States can have can come from its example and its demonstration of what its principles can mean in terms of opportunity for the people who live here.
Well, a lot of American people are worried that its tech sector cannot compete with China with strong government intervention. So Dr. Hu, how would you compare the two economic governance system? Do you think it's unfair?
Well, if you compare the U.S. Chinese economic system, it is just abundantly clear that the U.S. has the world's most dynamic, most efficient, and innovative private sector, including technology sector. But the government sector in the U.S. tends to be laden with political gridlocks and bureaucratic inefficiencies. By contrast, the Chinese state, both central and local level governments, faces far less checks and balances and enjoys far more executive power and administrative capacity than the US counterparts. Therefore, the Chinese state has a proven ability and a pretty strong track record in getting things done. Having said that, as a Chinese, I would caution against any sort of complacency on our part. US has been successful for so long with its system, however imperfect, so it would be a grave mistake to underestimate the US. US and China were clearly fundamentally different 40 years ago, but now the two systems are more similar than dissimilar. Both China and the US can be called a modern mixed economy, as first advocated by John Maynard Keynes. So, instead of confronting each other, or worse, trying to undermine each other, perhaps each country could learn from each other's experiences, adapt some of the basic elements in the system, and partner with each other to make both countries better off. And together, US and China have the ability to make the world better off.
Well said. Well, thank you so much. Oh, we have to leave it there. Thank you so much for sharing with us again. And Professor Lawrence Summers, former Treasury Secretary of the United States and President Emeritus of Harvard University, and Fred Hu, founder, chairman, and CEO of Primavera Capital, and former chair for Greater China at Goldman Sachs. We really appreciate it. And that's all for this edition of China-U.S. Econ Talk on CGTN. I'm Guanxin in Beijing. Thanks for being with us. Until next time, bye for now.